So, is Tencent going to the moon and not coming back? So it seems like the market was extremely positive about their most recent earnings result. And because Tencent is not officially listed in the US exchange, they do trade over the counter. And as of the time of this recording, the market is closed and it's up 4.7%. If you were to convert it to their Hong Kong counterpart, they're basically trading above 400 Hong Kong dollars per share. So just some top line figures in terms of their revenue growth rate. Overall revenue actually grew 6%. If you go into the value-added services, it's not looking very pretty. Social networks down -2%, domestic games down -2%, international games actually carried it up to +3%. So online ads was up 26%, and fintech plus other business services is up 7%. So if you compare both big tech counterparts, Alibaba and Tencent, their overall revenue growth rate is on par, but in terms of their business breakdowns, there are some that are exciting, some that are not exciting. So I guess some might call it a mixed bag results. But that said, I think Tencent has posted much greater profitability and bottom line results that basically got a lot of people excited, in my own personal opinion. In terms of their gross profits, they're up 23% year on year. Their operating profits is up 38% year on year. So in terms of looking at their gross margin trends, they're all trending upwards. They're trending very beautifully. So they're all coming out of that depressed cycle and depressed state of the Chinese economy back in 2022. So their free cash flow actually remained relatively stable. They deliver around $28 billion in free cash flow, so $12 billion in net cash, and their current market cap is right around $480 billion US dollars. So they did also disclose that the fair value of all their listed companies is around 74 billion, while the carrying book value of many of these private investments is right around $46 billion. So if you net everything out, if you divide the numerator, which is $28 billion in free cash flow, and you divide it by the market cap, less of the investment portfolio and the net cash position, so that's around $348 billion. So 28 divided by 348, that's around an 8% free cash flow yield. So if you were to just take a look to their US counterparts, where can you get companies that are trading at 8% free cash flow yield, 15% free cash flow yield, which is in Baba's case. Now, I think in terms of understanding the general trend, we are in a refresh cycle of the lousy growth in 2022. So the growing of 6% is of a normalized trend, rather than comparing it to a low base effect. So that's just generally it. If we look into the different business verticals right now, domestic games gross receipt was actually up 3% year on year, but the revenue was down due to the high base in Chinese New Year of 2023 and also weak monetizable content of one of their hard-hitting games. So international games gross receipt also grew sharply. They actually increased by 34% year on year, but it didn't flow through in terms of their growth rates because it was delayed by a long deferral periods for Supercell games. So many people are now focusing a lot of their efforts in trying to project out the international games part, because the domestic games are probably going to receive some sort of restrictions, especially so when one of the media outlets just said that gaming is like the spiritual opium for young folks in China today. The domestic games just basically stagnating, going up and down maybe a few percentage points, and Tencent is probably going to be much more aggressive in terms of expanding their international games pie. So they also receive very promising results from their new AI recommendation and engagement rates on their mini programs and video accounts for their social networks. The advertising has increased engagements with AI-powered ad targeting. So they also said that there's AI-powered ad creation too. But that said, I think to me, I'm a little bit skeptical, because even before many of this AI hype, it's not really the first time, or it's not really their first attempt in trying to integrate AI into their entire architecture, whether is it from a merchant perspective or from a consumer perspective. They're basically just fine-tuning it now. Maybe there might be some new breakthrough because of the large language model recently, but that's it. I think it should be the bread and butter. Using AI, using technology, these are the bread and butter for many of these tech companies. They are also starting to crank up the monetization engine for their video accounts and mini programs. They're up 100% and 40% year on year. Fintech actually slowed single digits. So it's the other business services that grew at the teens figures, and it's driven by cloud and the fees collected on their video accounts e-commerce. So for those of you who are wondering what's that, that's basically live streaming e-commerce. And yes, it seems like it's not just a very short trend. The consumption pattern of many of these Chinese consumers are slowly moving into live streaming. May is the lucky month for those of you who have yet to create a Weibo account. So for new users, Weibo is currently running a welcome promotion where you can get up to $1,050 US worth of cash vouchers, and also an exclusive Money Bull interest booster, which I'll talk more about later. So for a start, if you sign up for an account with the link below, make an initial funding of at least $2,000 and complete 3 US buy trades, and maintain the fund until 30th of June 2024, you can get $200 cash voucher. Simple as that. So for those that wish to hit a higher tier, you can get up to $1,050 in cash vouchers when fulfilling the max requirements. Here's the exciting addition. So you can get to enjoy an exclusive 180 days 3% USD Money Boo interest booster. So this applies to the first $250,000 subscription in the USD Money Boo. And this 3% booster is on top of the yield from the USD cash fund in Money Boo. So the USD cash fund in Money Boo had a 7-day yield of 5.4% as of 25th of March 2024. Therefore, you can potentially earn up to 8.4% on your idle cash if you park it with the USD Money Boo for this promotion. So I think this really can't get any better. And for those of you who have not signed up for a Weibo account, link is in the description box down below. So this is just some concluding thoughts for Tencent's most recent earnings. I think the storyline for investing into Tencent as an investment opportunity is still the same. Nothing much has actually evolved or changed for both Tencent and Alibaba. So they're a superior business, superb quality, incredible positioning and product offer. They're leveraging on their unfair advantages with their super app. They know trends, they know the ins and outs of consumption patterns. They then use these insights and analytics to basically invest for the future, do R&D, build their investment portfolio, and that's basically how they end up with this investment empire and this entire behemoth of a business today. And because of many of this self-reinforcing cycle, they can basically pivot and adapt very quickly. Even though they're in the crosshair of the Chinese government and they're not necessarily doing something that is good for society. But yes, we can see they've been executing and they are executing thus far. Now, the downside is this. Around 25% of their revenue is in a precarious position, which is in the gaming industry. So the gaming industry is in a spotlight for several moments and several key moments in the past 3 years where you have regulators coming up, stopping the approval of gaming. They said that they want to impose many of these very interesting ways of trying to curb people from gaming too much. They're intending to restrict the amount people can spend on many of these games. They're trying to stop certain gaming mechanisms so that to prevent many of this impulse buying, and the list goes on. So evidently, you can see that the market is not necessarily very concerned about this impending regulation or this crackdown or this risk of this CCP just coming down very hard and cracking down this segment significantly enough. Maybe something like the ad tech industry. Because if there really is a very big concern, and this is a very big question mark, the valuations of Tencent should be reflecting that, but investors clearly don't really care. And if I put these two factors on a continuum, meaning regulations and the China risk versus business risk and the competitiveness, you can see, based on the tales of these two Chinese big tech giants, one is clearly much more scarier, which is basically the impairment or the risk or the fear of other businesses basically competing a market share away, and there's some sort of a business risk. But that said, of course, many of this China risk, regulatory risk, it's a good story to tell, it's a good story to sell to investors, especially for those that don't really read up much and don't know much. When I see China, I just don't want to buy. And it basically allows for many other investors that see their opportunities to strike when everybody's fearful. Let's hope the Chinese dragon is real in 2024, and I'll see you guys in the next video. Goodbye!